Everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at basically all small caps here that closed Friday in play. These are stocks that made my stock twits, top percentage gainer list, and so I'm going to go over them kind of quickly here. First up is XTNT, closed up 38% basically. Check out how RSI and Fasto are both in the bull zone with room to run until overbought levels. 70s overbought on RSI and 80s overbought on Fasto. You got a bullish crossover here on ADX with the green line crossing the red line to the upside. And then, yeah, as you can see here, the bullish move on Friday was the close above the middle Bollinger Band, which is the dotted purple line at 544, which is also the 20-day simple moving average, and then above the green line, which is the 50-day simple moving average at 627. So going forward for next week, if it can stay above 627 and hold that 50-day simple moving average, you can see exactly what needs to break, and those were the three levels that were hit on Friday, the 300, 100, and 200-day simple moving averages. It has to get above 767, that's the 200-day simple moving average, to head higher. Fail to break those levels or drop below 627, and you could see a pullback to test that middle Bollinger Band support level. If the middle Bollinger Band and 50-day simple moving average do turn into support, a new uptrend could begin. As you can see, this has been on a long multi-month downtrend, and so it's trying to reverse that. Notice there's a PSAR bull flip. The dots flip below the candles, and check out the big giant volume spike. The long upper wick on Friday's candle, that is a red flag that there was some dilution and profit taking off of the high of day. Notice the bullish crossovers on MACD on both time frames. Okay, let's look at DCAR. Okay, so this closed up 23%. This chart is heating up. You can see the bullish crossover here. Yeah, so you have the green line, which is plus DI, across the red line minus DI, and the black line ADX to the upside. And then notice how Fasto is below 20. It dropped below 20 on this day, and then it closed above that level. So it's a signal that the chart's heating up after a big pullback. As you can see over here, yeah, sorry about that. I got my pug and my wired-haired terrier having too much fun in the background. Oh my goodness, they sound like vicious pit bulls, but they're really two little tiny dogs. Yeah, so down. Sorry about that. Down here we've got the a bounce off of this 213 support zone. And then on Friday, the bullish move was the close above the pink and lime lines. That's EMAs 4 and 8, and then also closed above EMA 13. That's the orange line. So as you can tell here, as you can see, that when the candles drop below, there hadn't been a close above all three levels until Friday. So it's a signal that the chart's heating up. Also notice the green dots here. They were above the candles as the chart was breaking down. They finally flipped below on Friday. SAR stands for stop and reverse. So it's another signal that the chart is heating up. Possible new uptrend starting if it can break the next key level, which is the dotted purple line. That's the middle Bollinger Band at 325. Above 325 signals it wants to head higher. If it drops below 280, that's going to be a red flag. It needs to stay above that EMA 13. Notice there was a volume spike on Friday, a bullish crossover on 8, 13, and 5. You want to see that 12, 26, and 9 crossover on the MACD if you're a bull. Okay, look at VII. This is heating up. I believe it was up in after-hours trading as well on Friday. Yeah, it's a thinly traded stock. It's got RSI now above 50. Notice how, it tried to get above 50 back here in January, and then finally it's back above 50 now. Many times that signals the chart's heating back up. There was a what we would call a bull trap on Friday. You can see here the open on Friday was up here at the 200-day simple moving average, and the share price did run all the way up to 53, but it pulled all the way back. It formed this long upper wick that shows dilution and profit taking, and it dropped below the open. That's how the black candle forms in the charts that we make. It signals that even though the stock was up on the day, it closed below the open. You could see the close on Friday was down here at 38, so it still closed up on the day. But what this candle is telling you that the bears were actually in control, and so it's a red flag. Generally, when this pattern is forming, we like to head to the sidelines. You can see that all the major resistance is right here. Okay, so you have the 100-day simple moving average is the gold line, the 50-day simple moving average is the green line, the red line's the 200-day simple moving average, and the blue line's the 300-day simple moving average. It has all of them all lined up, and then it has the middle Bollinger Band there, which is the 20-day simple moving average at 38. Notice that the wicks on the candles, the high of day on Thursday and low of day on Friday are touching, so there's no unfilled gap below. It came down and it filled the gap and it bounced off of that. So basically for VII, it's only going to get interesting if it's above 47. Okay, if it's above the 300-day simple moving average. If you see VII trading at 48 or above, and it can close above that level, then it gets interesting. It could run back up here, and if it fails to get above those levels, you know, it's dropping down back down to 38. You know, it's basically been in this sideways type of channel. You know, it's been running up to you know, it's been failing to break above the 60s. You know, and it's coming back down. You know, it's currently in the middle of the zone that it's been trading in, and yeah, you could see here that yeah, the trading was even tighter. You know, it dropped below that. Yeah, basically it's got to break above that resistance to head higher, and yeah, keep an eye on it. It's a thinly traded stock. It did have a nice it had the problem with the volume spike is it's a red flag of dilution, and so it's not what you want to see. If you look here, I'll put in accumulation distribution real quick and shaken money flow, and then you can see that they will have a tick down. They'll be down ticking, and so yeah, see how accumulation distribution fell off a cliff here. You know, it had been kind of you know, it's been in a downtrend, but it really dropped big time on Friday, and then look at the huge spike down on shaken money flow. Well, you know, the share price was up 9% on the day on a giant volume spike, but accumulation spike down, accumulation distribution, and shaken money flow spike down. Those are signs of dilution. Okay, so those are all red flags. It's bearish divergence. And then you can see here on the VII 15-minute chart, you can see it had the big gap up open here, and then the candle, the first candle of the day was above this upper Bollinger Band, and when that happens, the candles are likely to work their way back into the band, especially when you have the upper wick here. And notice how it was the big volume spike at the beginning of the day. The climax spike happened on the first candle of the day, and then it proceeded to pull back. And so basically the key was to take gains right away. Yeah, you can see here it's trying to break out of this channel here. It formed a you know, this like falling wedge type pattern. And basically what it's going to come down to is 42. That's the middle Bollinger Band here. If it can break above that level and turn that into support, then it'll still be in play. If it fails to get above 42, the key level to hold is this 50 simple moving average at 395. That's the huge level. If that level holds, then it's still, you know, it could still be in play. If it hold 395, break 42, could still be in play. But if it drops below 395, then you're looking at 369, 37. You know, the problem with the stock like this is look at the average daily volume. You know, hardly any volume on the 14th, just a little bit of volume on the 15th. You had what we call a front load. These people loaded here. They probably unloaded here. Yeah, so it makes it difficult to trade when the volume dries up. Okay, take a look at NVAX. This closed up 8%. This is breaking out. Okay, so check out how on Friday it closed above high close horizontal resistance. The closing price on the 23rd was the key level to break, the 23rd of January, and it gapped up open above that level and then ran higher. Now it did pull back from that 250 high of day. That's going to be the key level to break here. And then basically what you want to see now is if you're a bull, is this candle turn into support. So you want to see that basically 222 to hold on a pullback. And then you want to see it continue riding the EMA4 at 218 support higher. Notice the big volume spike. You know, it had the volume spike multi-day here. You have a bullish crossover on 8, 13, and 5. You want to see that 12, 6, and 9 crossover as well. And so when a stock's breaking out on the daily chart, the key is to look at the weekly chart. And so as you can see here on this weekly chart, it's coming up to the key resistance level right now. That's the 100-week moving average, the gold line right here. That's at 258. And so in order to head higher, it's going to have to break above 258 and then close above for the week. Now keep in mind that the next week's candle will not set until the closing bell on Friday. So a lot can change between Monday and, well, basically Monday's a holiday. So between Tuesday and Friday, a lot can change. But what you want to see if you're a bull is that push through that 258 and then the 100-week moving average turn into support, and that would signal the uptrend should continue. Now if it stalls out here at this 250 resistance zone, that could signal a temporary top, and what you want is this EMA4 to hold. The EMA4 support's been holding during the uptrend here all through January, all throughout 2018, and so you want to see that trend continue. If it closes below 209 for the week, that would be a red flag that the share price, you know, that this run is cooling down and the share price could consolidate. You know, as long as the middle Bollinger Band down here at 157 holds or 147 holds, you know, the uptrend's still intact. It's just a big drop between 209 and 147 if it cools down. Okay, and then now let's look at the next one. Let's look over here at RMGN, okay? At RMGN, okay, it's up 6% on Friday. Okay, so what you want to see here on this one, it's a very thinly traded stock. You know, check out the super light volume. It's only interesting if it can get above the 50-day simple moving average in the middle Bollinger Band there at 94, and so above the 94 would put it in play, but it would have to hold that level. You can see back here it failed to hold that and it pulled back. And then what you'd be looking for if it turned the middle Bollinger Band into support was a run up to the 100-day simple moving average at 124. Once again, this is a thinly traded stock. They're very difficult to trade when on days that there is not volume. So yeah, just keep an eye on it though for the penny stock players. It did have the PSAR bull flip, you know, the MACD bull cross in the 8, 13, and 5. Okay, take a look at OPGN here. Yeah, so this has been in a really long downtrend. You can see the red candle formed up here off the 100-day simple moving average. All these red volume bars in a row. You know, it tried to bounce down here and then bounce again. You know, it's tried to bounce twice last week, but the whole key is it can't get above the pink line. That's 205. So once you finally see a close above that pink line, EMA 4 at 205, that's going to be a signal that it's ready to head higher. So keep an eye on it. Above 205 on Tuesday would signal that it could possibly head higher. EMA 8 at 228 is the second level to break. But what will be a bullish change in trend will be a close above EMA 4. So keep an eye on that level next week. Okay, look at BPMX. It closed up 8% on Friday. RSI is back above 50, and then you've got a bullish crossover here on Fasto. So this had a multi-day pullback as well, and on Friday it closed back above that middle Bollinger Band at 0.155. It needs to hold that dotted purple line, and then you can see the upper wick pulled back, you know, pulling back from the next three key levels to break, which is EMA's what is this, 8, 13, and 4. And so basically above 16.2 would signal it wants to head higher. And then the key level it's been trying to turn into support is this 100-day simple moving average. You can see all these candles failed to do so. Once it finally turns that 100-day simple moving average into support, that would be a signal that it wants to head higher. If you see it drop below 15.5 and fail to hold on to this middle Bollinger Band, you could see a drop down to the 50-day simple moving average at 13.1. Okay, take a look at Jaguar Health here, JAGX. It's heating up again, closed up 8%. RSI is above 54. It's above 50. It's at 54. And so basically, you know, this had been going sideways here. And on Friday, it closed above high close horizontal resistance. That was the closing price on this candle here. The close above does signal more upside potential. You can see for a couple weeks it was heading sideways. Finally closed above. Many times that'll be a signal that it finally wants to head higher. And so what we're looking for is a run up here to the upper Bollinger Band at 16.18 and that 100-day simple moving average at 16.82. Notice it's lined up with the closing price on the 5th of February and the closing price here on the 18th of January. You know, these are the three big levels to break here. You know, it's always, you know, you always have to bust through that upper Bollinger Band, and then it has to hook up and the candles right in EMA 4 support to head higher. What happens a lot of times on charts like this is it busts above the upper Bollinger Band, and that signals a top and it pulls back. You know, it busted through the upper Bollinger Band, signaled a top and pulled back, got above the upper Bollinger Band, that was a top and pulled back. And so once again, if it closes up above the upper Bollinger Band, you have to be on the lookout for a potential top. Okay, let's look at PTX. Okay, so yeah, keep an eye on this. It did barely closed up on Friday, but the reason why I'm showing it to you is because it did have a technical development, even though it was so slight, and this is a thinly traded stock. It closed above the middle Bollinger Band. So it finally closed above the dotted purple line, and many times when a key level is resistance and then they finally let it close above, that's a signal that it's, you know, finally ready to head higher. We will see. I mean, it's amazing how a subtlety like that can be a major difference in whether or not a chart will follow through or whether it won't. I'm not saying that this necessarily will, but I'm just saying it looks more interesting today than it did on Tuesday, you know, Tuesday, Wednesday, or Thursday. You know, these days were not interesting because it didn't close above. And then now that it finally did close above, you know, it's a signal, you know, that, hey, this might follow through next week. So let's keep an eye on it. If it stays above 238, then you're looking at the 50-day simple moving average at 248 to break. And that's where it could really get moving. If it can get above that level, then it could run back up to that 100-day simple moving average at 268. You could see the last time it was trading below the middle Bollinger Band and then closed above, it ran up to that 100-day simple moving average. So what we like to look for are patterns to repeat, and yeah, we'll just see if this can follow through here. It did have the volume spike on Friday. Well, like I said, it's a thinly traded stock, so be very careful. Thinly traded stocks are always easy to buy, usually easy to buy, but they're tough to sell. Okay, let's look at YTEN. This is another thinly traded stock setting up over here. Keep an eye on it, just like the one I just showed you with PTX, how it closed above the middle Bollinger Band. YTEN has yet to close above the middle Bollinger Band. Okay, so that support level broke back here in the first week of February. You can see how the candles started forming below the dotted purple line, which is the 20-day simple moving average. And so it came down here and it found support at 150. And so this is the bottom of the channel. And so the top of the channel is up here at 204 currently, where the 100 or 50-day simple moving average is at. You can see the high close here on the first trading day in January, and then the 29th of January as well. That's the top of the channel, and that's currently lined up with 50-day simple moving average. And now it's bouncing off of the bottom of the channel. And so if it can get above 170, it could possibly run back up to that $2 level. You know, it has to close above in order to head higher. If it does finally close above, and you see it close above that level, that'll be like, okay, YTN is finally ready to go. Until it does, this will be the sell zone. So, you know, like on sideways channels, you know, you load at the bottom of the channel and you sell at the top. You know, you know, it's tough when they don't pull it back, but this did get all the way to the bottom, so there could be a possible chance for a trade up to 2, but it has to break 170. If you look at PVCT here, this is an over-the-counter stock now. It used to be a big board stock. It's heating up. It closed above the middle Bollinger Band, so keep an eye on it next week. You know, the middle Bollinger Band support broke on this candle right here, and then it, you know, it traded down. It held the green line, which is the 50-day simple moving average support zone there, and then on Friday it finally closed above the middle Bollinger Band. Notice the green dots, you know, flip below the candles. You've probably got, yep, you got the MACD bull cross, and then it's pinched here, getting ready to bullish cross on the 12, 26, and 9. You've got an increase in volume slightly, so just keep an eye on it. It could get moving. With RSI at 57, it's got some juice in the tank still. And then what you'd look for is, you know, ultimately is a run up to 9. That's the high close resistance level. You are going to get some resistance here at 825. Those are 2 big levels to break. But yeah, this looks like it could be trying to reverse here and maybe get a little upside going. Now it's not going to be in play if it drops below the middle Bollinger Band and 50-day simple moving average. Those are must-hold levels. Below those levels will signal major downside risk, and it could drop down to 5 cents. Okay, let's look at BIOA. This is going to be the last chart in this video. And notice that it's a material specialty chemicals, and then you've got YTEN here is material specialty chemicals as well. And so a lot of times you'll have you know, stocks that are in the, you know, you have stocks in the same sector that heat up at the same time. And so yeah, keep an eye on this one here. This is another one that's beaten up, and it's been driven down really bad. You know, basically it was a big board dropped down to the OTC, and it's gotten hammered. And then you've got the big volume spike down here at the bottom. You know, people trying to time the bounce off of 8 cents. It dropped lower down into the 5s. You know, and so you've got people trying to catch the falling knife here. And many times better than catching the falling knife is just to wait for that break above EMA 4, and so once it finally goes above that level, that's going to be your signal. Okay, this is in play, and then you use EMA 4 as your stop loss, and you just don't hold as long as, you know, if it's going to close below EMA 4, you don't hold. You never hold long if it's closed below EMA 4 on the daily chart, because that signals more downside risk. If it closes above EMA 4, then you can try to go long, but you use that level as your mental stop loss level, and you just, you know, you have to be disciplined, because if there's more downside risk. This is where you want to be short when it's below. Once it finally crosses above, that's where the bulls get a chance. And then the upside potential here is that you could see a run between 8 and 12, you know, back up to that EMA 8 level. And then you have the gap up here. There's an unfilled gap between these 2 candles. And so yeah, so just keep an eye on it for a dead cat bounce. All right, thank you very much for viewing this video. These are just some small caps to keep an eye on next week. Please check out our chat. I'll post the link below the video. Thank you.